All right. Good afternoon, everybody. Hopefully, you're doing well. Welcome to the afternoon market action. My name is Patrick France. Also, I have Glenn Tompkins, Senior Instructor here at VectorVest, with me as well. Glenn, do you want to say hi to everybody?
Hi, everybody. Joey is out of the office, so Patrick is so generous to be hosting today. So I'm on the other side of the spectrum, so I can't see what Patrick can see, but I'm glad to be here.
And we're glad that everybody else can be here as well. So, welcome, everybody. This is our afternoon market action once again, and we cover what's going on in the market here, have some news stories for you guys, have some stocks to look at, and pretty much anything that you guys, anything related to the markets, you'll find here with us today. So glad you guys could all make it. Hopefully, you guys are having a good day so far as well.
If you can hear us though, chat in, let us know. Type in VV Nation and where you're tuning in from, just so that we can get a feel of if you guys can hear us well. Not good, but well. We want you to hear us well.
Yeah, I want to make sure the audio is set and the audio is coming through good for everybody as well. See some VV Nation showing up in the chat. There we go. Like seeing that.
And I see it on the Facebook side as well. Jay is there. Hi, Jay.
Hey, Jay.
Hi, Vernon.
All right, so let's go ahead, jump right into it here today. And starting off, well, actually, this is your topic, so I'll let you start us off with this one, Glenn.
All right. So we know that with what's going on in the market, we know that inflation, we know interest, we know wars, we know jobs. And the first story, the great resignation, see more companies offer equity to staff. So why is that important? Because with all of the jobs that are out there right now, a lot of them, uh, a lot of people want a lot of different things. They want more wages, which makes sense with rising inflation. They need to make sure that they can cover the cost of doing business by being able to pay their bills. A lot of people who were working, the older segment of the market that was working, they left and they're not coming back because of fear of COVID. So the companies that are hiring people have to become more creative in what they're doing. And I think that offering equity to staff, giving employees options, stock options, that's going to do a couple of things. Hopefully, the employees look to do the best that they can to help the companies grow. If the company grows, then the price of their shares of options for the company grows. So it becomes a win-win, and the companies can look at that as a way of offering more to the employee rather than giving them more money. If you want more money, you want unlimited potential in your ability to make money, then we can look at it from the standpoint of help the company to grow, your options will become more worthwhile. So I think that's very interesting that companies are looking at additional different ways to get and keep employees. Another thing, if you own options in a company, most likely you're going to stay with the company longer as well. So I like that as a way to help people to get people and to get them to stay. What
So
do you think?
I'm gonna give the opposite side of things.
Okay.
I mean, it's great in theory, but it doesn't address the main issue that these newer people coming back into the workforce are looking for. It's yes, you have that potential money there for later on, but it doesn't solve the now question, the now issue, of rising inflation and rising costs of just living day to day. So if you offer the same amount, that's going to be what that employee looks at, of what they're taking home. And that's not going to change that much just because, okay, well, 5 years from now, I could potentially get, stock option in the company and sell it. But so I don't know if that's going to really be a big motivator for people coming into the job force.
So
Um,
how do you fix the now problem? Well, you fix the now problem the way the Fed is doing it, by becoming a little bit more hawkish on the rising of interest rates. And if that's the case, eventually it's going to drive us into a recession, which the people that are working, it's going to hurt them even more. So I like your argument, and I think that it comes back to the Fed coming to the party too late, and they just screwed us.
I mean,
That's what it comes down to.
I can't really disagree with that. But I mean, that's the thing is, okay, let's say we go into recession. You offer stock in a company. And then when a recession hits, you find out that stock, if you actually are able to exercise it by that point, depending on when it is, it could be, probably not, but it could be, it could be optionable. And if you did and you exercised it, and now all of a sudden that stock isn't worth nearly as much as what the option was worth. So you're not really getting that much to help you out with getting through a recession there. So,
and that's what a shock on Facebook says. Typical, give the staff when the stocks are going down. This is a good idea, but the timing is what touched me. And
yeah,
I think that you're touching right on that. What a shock said. That was it. It is what it is, but I think it could be an incentive to get people to come there. But I think between both you and Ashok, it could be an issue because it could be getting done at the wrong time. So I hear that as well.
Yeah, I think it's a timing issue, but also just simply for the fact that, as an employee going in, when you're looking at a potential job opportunity, you're looking at what you're going to be taking in every, week, bi-weekly, whatever it is that you get paid by. And that's not going to change. You're still not going to have any extra money in your pocket to help you out with the rising cost of things. So I don't know if that's going to be the motivator that people going back into the labor force are really going to be looking after. So
how about Jeff's statement on Facebook? Lower executive salaries and bonuses and perks and give higher guaranteed salaries. That's a great idea, but that we do live in a world of capitalism, right? So all these companies are out there to make as much money as they can. So Jeff, I'm with you.
That makes too much sense, man.
That is the right thing to do.
That makes too much sense.
Absolutely. This is capitalism, baby. So,
but I was actually talking with Steve earlier about it today. We were talking about people going back into the job force and what it's going to take, and how airlines are having to struggle trying to hire pilots. You have people not going back to work at restaurants because of, one, not making enough for what it's worth, and two, worried about, putting themselves on the front lines of getting sick again. And so it's interesting. You're seeing companies, well, starting off at bigger companies, and it's going to slowly trickle down to the smaller companies as well. Yep. But you're seeing these bigger companies offering more than what they have been historically for, the mid to entry level positions to try to get people in the door. So it's going to be interesting to see how that works, and, the change in the overall workforce as we go forward over the next, 12 months at least.
It's going to be very interesting. It is. And Clyde keeps spamming the same thing. Clyde, if you keep spamming it, it's going to keep taking your message away. But how do you feel about buying Amazon and Google? I think, Clyde, stop. I'm going to stop you. All right.
If you guys want to see Clyde stop spamming, make sure to smash that like button.
I'm finna,
every smash of that like button helps us avoid spam.
Please, folks, do not spam us. We can see it, and we'll get to it. We're trying to get to everybody. I like this statement, but you keep spamming it, and what's going to happen is Patrick's going to talk a little bit about that today. Patrick's definitely going to talk about that today. All right, let's move on to the next story.
All right, what you got for us?
Huh?
What you got for us?
Yours, my friend.
This one's mine. Okay. Yeah, really no specific stock, oriented story, but just thought it was interesting, since, just happened today, this morning, noticing, Bill Hwang, I think is how you pronounce it. I may have butchered that, but whatever. But yeah, he's already been in trouble once started up Archegos. As you guys know, last year, Archegos was a family office, basically a hedge fund just without the oversight, and basically got over leveraged. It's crazy to see how much over leverage he was able to obtain, and yeah, almost caused a few big names like Discovery. What were some of the other ones he was in? But there was Discovery, and then there's a communications company that pretty much crashed because he was so over leveraged and got margin called, and a lot of the brokers that offered him money took a big hit for it. So now they're going after him rather than going after, the bigger banks that allowed it to happen. And I think it's interesting that they're going after specifically him rather than going after the main culprits of Morgan Stanley, Nomura, I think it is, Credit Suisse, those guys. Let's get rid of this. Where is it? Talked about it. Maybe this one has it. Maybe it doesn't. Let's see. So yeah, he had roughly $10 billion and he was able to bump it up. I saw in another article, he's able to bump it up and had the buying power of almost $100 billion by the peak of it. Yeah, it's pretty crazy to see, somebody who has already been banned, somebody who has already been caught before, and these companies offered him the position to be able to put himself where he was. So, but you have Discovery,
happen,
Credit Suisse.
How does that happen? How do you, if you know that this dude has done bad, how does that happen?
I mean, he got taken out for a little bit. I think it was like a 10-year ban, and then got right back into it, had other people starting it, and he just worked on the side, but, pretty much was the main man guiding it. But yeah, Viacom was the other one. Viacom and Discovery were the two big ones that took a pretty big hit. But yeah, you have Nomura Holdings, Deutsche Bank, Credit Suisse, and basically what he was doing, he was going to him saying, "Hey, I need this much leverage, and then I'll put up this collateral." Well, he was taking that collateral and going to another bank and saying, "Hey, here's my collateral. I want this," and opening up basically, credit lines, and continued to increase them over time. And it was interesting. I think it was the VP or one of the top board members on Archegos' board came from, I think it was Goldman Sachs, and she was the one who got him, started back into it. She had some connections, it seems like, started helping him get, with Goldman Sachs. Then all of a sudden you go to the next guy and say, "Hey, look, Goldman's already given me this much." And then they offer, "Okay, well, if Goldman trusts you, okay, we'll do that." And you just keep repeating it. And next thing you know, you have $10 billion and turned it into $100 billion worth of leverage. So
wow.
It's pretty crazy to see how unregulated some of these markets are, or some things in the markets are, and how much of an impact they can actually have.
Wow. All right. Clyde, we're going to talk about it. Yeah. And, but now I think skipping your question is the appropriate penalty. No, I'm not skipping the question. We're going to talk about it. Robert says, interesting that Fidelity Investments will offer 401k investing in crypto. I just did a video on that yesterday. Go check out that video. All right, go check out that video.
But yeah, Glenn, if you notice here, at times, Hwang's leverage reached as high as 1,000%.
That's
on $10 billion.
Nobody should have that kind of buying power, though. Holy smokes! Hell, if I could do that, I'd have 1,000. Let me have 1,000% of my buying power. Holy smokes!
This truly is. It takes money to make money.
Yeah, man. Yeah, and not only that, it's not what you know; it is who you know.
Exactly. But yeah, I mean, it's also kind of humorous the fact that it took them now a year to finally get to, actually process something like this. I mean, talk about slow. It seems like they were extremely slow getting this going here.
Yeah, man. All right. So now the next stories are on EVs. I'm a big fan of EVs. There's no ifs, ands, or buts about it. I've done several several stories on the vehicles, on the charging platforms, on the cost of maintaining an electric vehicle over a combustion combustion vehicle. I keep calling it combustible, like the car is going to blow up. But
I mean, they have batteries, and I've seen batteries explode before.
well, let me tell you something. Those are coming so far and few in between. But one may be too much. I hear you on that. But the demand is increasing on them. The cost of the electric vehicles are coming down. And unless you really want a top end model, you're going to pay a lot of money for that. But a lot of the base models are coming in now at 40 grand, which I think is doable on a brand new car. And this is an electric car. The batteries are warranted for 100,000 miles or 10 years. We haven't gotten to that point where people are exchanging batteries yet. But if a battery goes all kabonkers within the first 10 years, 100,000 miles, it gets replaced for free as long as you're in warranty. All right, so Lucid gets an order from Saudi Arabia over 10 years for 100,000 vehicles. 100. Saudi Arabia orders electric cars. Why? They have all the oil. Well, John, I'm with you. I still think that combustion engines don't go away anytime soon. It doesn't happen. But with John, and this is actually going after your question, I think with people wanting to become more climate conscious, clean energy is a direction that I think the world is trying to go into. Electric vehicles are a path to getting to that end result. I'm listening to Jeff on Facebook. EVs are here to stay. Very sensible. Again, I've done the videos on them. I'm a big fan of them, but you're going to find news like this, which will help to push these electric vehicles higher. Now, the other side of the fact is, can they produce the product? That's where the problem comes in. Can they keep the inventory? How about the F-150, the Lightning, already sold out? And it hasn't even made the cars yet. Well, they said the cars are already made. They haven't even started to sell them yet, but they're sold out. The demand is there, folks. All right. Why waste the time on EVs when hydrogen is available? Brian, I don't know still yet if hydrogen is strongly safe. All right. Remember, we made a bomb out of hydrogen. You do know that, right? I don't know all of the facts on hydrogen, but I know that people are going towards the whole electric. And Putin is not pushing this agenda. Who's saying that?
And also keep in mind as well, if you're the biggest oil producer in the world almost, the more electric vehicles you drive means the more oil you can produce and sell for a profit. So,
and you're gonna the oil producing companies countries they ain't going away, and oil ain't going away either. It's not. But 100,000 vehicles over the next 10 years from Saudi Arabia is with an option to purchase an additional 50,000 units. All right. Next story. XPeng. XPeng got buying power. ABC will provide XPeng with a comprehensive credit line of up to $1.1 billion. That gives them more money to go into research and development for production. That's going to be a big story for XPeng as well. Next story, NIO. I see a couple of people in here talking about NIO. NIO rolls out its 200,000th EV in record time. Now, remember, NIO was supposed to be the Tesla of China. It just hasn't gotten there yet. And all the EVs have ebbs and flows, up one day, down one day, up 1 month, down 1 month, back and forth. And I still think there's a lot of pushback on people on the combustion side who are thinking that EVs are a waste of time. I don't think so. And the last one is Tesla.
Do you not think NIO though is going to have any issues like with the rolling lockdowns they're constantly going through?
Yeah. Well, see, Tesla's already affected. Tesla's had that issue. But the thing is, Tesla's got more giga plants than just in Shanghai. Yeah. NIO is going to feel the effect, but even with the story of NIO, again, 200,000 cars, that's a lot of cars. That's a lot of EVs. So could it get some pushback because of the shutdowns? Absolutely.
But how many people live there? Because, I mean, 200,000 yeah, that's a big number, but compared to how many people who live there, that's still not very many.
Well, from the perspective of just the company putting out the cars, that's a big number. In respect to how many of them, how many people are going to be driving them, or how many people are in China, I think that that's inconsequential just at this point. I think the bigger picture is that they've put out the cars. If they've put out the cars and they can sell the cars, that's going to grow the bottom line.
Yeah.
And that's what it's all about, is growing, is making money. And as long as they're making money, they can just put out 100,000 cars and make the money, as opposed to 200,000. 200,000 is, in this space, is still a lot of cars. So I'm not looking at it in respect to how many of the people are there. I'm just looking at it in the sheer fact of this space that's still being looked at as, by a lot of people, and by a lot of people, yeah. I just think the number of cars is the more important part. But I hear you on the amount of people it's going to be servicing, but I'm looking at it just from the sheer number of cars that are being put out there. NIO is being economical with their balance sheet. It's never the truth. Well, we'll see. Glenn, at one time, NIO was priced about 10 times more than the VectorVest value of the company. It's not surpassed that since that peak. So we'll look at graphs on some of these stocks to give more insight. But remember, this is just all news right now. And the last one in my EV space, Tesla, a stock up 3%. EV maker recovers some of its 126 billion loss in the market cap. Biggest thing for Tesla most recently is with Twitter being bought. I think a lot of people behind the scenes were like, well, he's leaving us poor Tesla. He ain't leaving Tesla, nobody. He's still going to grow the company. We're still going to look at the stock. But EVs just in general, I'm liking them right now, based on news, based on a lot of the upside capability with these companies.
I mean, out of all of them, though, and we can talk about this when we get in the charts as well, or just when we're looking at them, but, Musk has a light years ahead lead than anybody else, because not only is he making the cars, which everybody's focused on now with Lucid and all those,
chasing them.
But he also has the aspect of, the ride sharing that he's getting ready to start. As somebody mentioned a second ago, bringing or using your battery, your extra energy that you have from that, and selling it back to the grid. He's already past the making cars point and looking at new ways to continue to grow that Tesla name. So
the Tesla, the name, the brand recognition is there.
Yeah.
But from the EV spot, if you just keep them in that EV spot, it's going to take a lot. And I just saw a news article on Ford. Ford is really trying to actively go after Tesla. Ford's got the capabilities. They've got the building capability.
I don't know if they have the talent to be able to try to keep up.
I think if they are lacking in talent, it ain't like they can't buy it. It's not like they don't have the money to buy it. Absolutely. So we'll see. Dealers can't keep EVs in stock. Manufacturers should make more, says Jeff on Facebook. Well, that's easier said than done. And therein lies the problem. These companies are only going to be as good as what they can produce and make for the demand. If the demand is growing, which it is, can these companies grow on the demand? All right. What was the next story up here?
You want to go take a look at those real quick?
We can if you want to.
All
right. You got to get us into the software.
Yep. Doing that right now. There you go.
All right. Let's go to the Glenn's picks real quick. So the EVs, let's go peep them out. Here's my picks for you today. Notice if you sort by our master indicator. Well, shut up. Tesla's at the top of the list. So Patrick's right on point when he talks about nobody's going to catch him. They are light years ahead. So I'm just going to highlight all of the EVs. There's a Lucid. I don't know if we got in here, but there was a story on Lucid as well. I forget what the story was. That sucks because I forget what it was. But notice that out of all of these EVs, the only one that's got positive earnings is Tesla, XPeng Neo, and Lucid. I think that they will still all be news-driven stocks.
I
They'll
mean, and
all
Tesla
still
took what, 8 years to finally go positive, at
on
least
what? On which one?
on their earnings. I mean, at least 8 years, probably more than that. But from Tesla's run starting back in what 2012 or so, when it finally started breaking that $40 mark, and then started moving higher from there.
Yeah. So it goes back to name brand recognition.
Yeah,
Elon Musk has definitely made a name for Tesla, and it's going to take time. And even as I look at these earnings per share, they're getting better.
yeah.
Yes, they're all negative, but they're all getting better. But what I do like, from the perspective of these companies, Tesla's got the only one that's got the upside potential with the relative value above one. All right, so I look at all of these other companies, I look at the demand, I look at the news that goes along with what these companies do. Do they have upside? Yes. I need to see the relative values go above one to say that these stocks can effectively outpace the market or beat the market. And I need to see these companies make money. All right. So I bring these to the table because these are news driven. Right click, view the stock graph. These are all news driven. Oh, you got it.
I'm
Yeah.
bringing it over.
All right.
Sorry.
So,
Oh, it kicked me out. 1 second.
sigh. So I'm going to tell you a joke. A horse walks into a bar, and the bartender says, "Hey, man, why the long face?" Dun-dun-dun. All right, so that's my joke of the day. I don't know how good or bad that was, but it was what it was. All right. Did we close out at 7?
Yeah, for some reason it kicked me out, so I'm getting back in there real quick.
All right.
So keep telling some corny jokes.
I gotta make sure that they gotta be good jokes because I know a lot of bad jokes. I know a lot of jokes that got some cussing in it. I can't do that. I'm a good Christian dude. I can't be doing that. I just heard these jokes. These ain't jokes that I
I've
know.
got one
Brian
for you.
says Toyota went with hydrogen. Isn't Toyota, I think, isn't Honda and Toyota working on a hydrogen engine somewhere? And that's just one company, Brian, where I can quote off a lot of companies who are in the electric space more so than hydrogen. I still think that hydrogen's got a way to go. Brian, that's my opinion. That's my opinion. I think that hydrogen's got a lot of way to go. I still think that if you're going to look at smart, climate smart vehicles, I think it's still going to come from electric right now. Honda sells a hydrogen-powered vehicle in California. That's a company. Whereas I've got a lot more companies in the space for electric right now. And again, I'm only calling it as I see it. And if hydrogen picks up momentum, and we'll start reporting on that. It's just not there yet. It's just not there. So that's answering both Mark and Brian's question on
right,
YouTube.
we're good now.
All right, put this on a 3-month graph. All right, as the story was coming out about Twitter, Tesla took a hit, but look at the earnings per share. Earnings is the engine that drives the stock's price higher. Look at the earnings per share. The company continues to make money. Relative value above the value of one, this company should outperform the market by 70% over the next 1 to 3 years. Company continues to report good earnings. It's a safe company. Tesla is fundamentally sound.
So let me ask you this. I'm looking at the graph and seeing that big down day yesterday on massive volume.
Yeah.
Do you think that's potentially people who are against Musk going after Twitter and buying Twitter?
Yep. And I think that's a lot of the
making them pay in Tesla?
I think that is a lot of the move that happened over the last few days. Especially with, like you just said, not only a big down day, but on huge volume. There was a lot of selling conviction behind it. So I think a lot of people are like, oh man. But I think that based on the fundamentals of the company's going to rebound and rebound nicely. It's going to.
So do this for me. Put it on a 1 year.
Yep.
And then put the GRT on. So this
Still
is something I've been noticing with
ago,
all the big growth stocks.
Now, interesting. Even though it's falling, it's the decline, the rate of decline is not nearly as strong as the rate of ascent when it was going up. It's slowing down, and a lot more of a plateauing right now on earnings growth. But Patrick is right, as he was getting ready to say, on a lot of the longer term big growth stocks, this is something that's happening. All right, the rate of earnings is decreasing. Now, I also look at it from this high that occurred back here on 11/4 of 2021. We're still seeing a downtrend, a series of lower highs. I still think that based upon what the company's got the potential to do, that it should be just fine. Would I panic on it right now? No. If I do own it, what would I do, especially if I'm looking to hold it long term? I'd put some kind of protective measure on the stock, whether I'm buying a protective put, or I can actually collar it by itself, whatever I want to do. I think long term, the stock's got some good upside potential. It's about back in this time when it was falling, it did pick up a sell recommendation in the VectorVest system, but as recently after this nice big run up, this is a 20 period exponential moving average. It got a buy, big fall off, but prior to that, a little bit of a channel formation.
That was coming up right for earnings.
As that, as Patrick just said, it was getting ready to place for earnings, but it beat.
Yep, and then it came back down the rest of the day. Yeah, that big green candle.
It beat. But I think a lot of this right here was that people were like, man, you haven't bought Twitter. I don't like you no more. All right, put this back on the 3 month. Let's go look at the news driven ones. All right, XPAD. News is there, but look at the stock. All right, would I buy it now? No. Do I still like the space? Yeah, long term. But look at the earnings growth rate below the 20-day exponential moving average. So I bring this to the attention of it is news driven. And the whole idea is, as I'm trying to get a hashtag to go viral, we want to keep you hashtag situationally aware. Hashtag situationally aware.
Dude, that's way too long to be if you want to
no,
make
it's not.
go viral.
I like it. Hashtag situationally aware. Y'all need to make that go.
So one of the things though with XPV is you have this, I mean, you have a steady decline, top left, bottom right. I wouldn't be touching it until I see a breakdown or breakout from that downtrend.
I agree with that. I'd wait. And you got that here. You got that here. You're like, whoa, all right, the stock is bottom, the gap down at bottom, and it ran sideways again, sitting at a level of resistance, sitting at 31.15 and couldn't break through.
Ran right to that resistance zone.
Huh?
Ran right to that resistance zone.
A couple of times. In the zone, hit it, and down, hit it. It takes two to make the thing go right. Anyway, and it's currently below the 20-day exponential moving average. It's news driven. I'm not going to touch it right now. Okay. Next one, same kind of scenario, NEO. And the reason why I bring these to the table is because if you look at Twitter, you look at Facebook, you look at YouTube, these names, you look at Wall Street Bets, you look at Stock Twits. This is a name that comes up over and over and over again. And people want to know, hey, what should I do with NEO? Well, I like the news. The news is good. 200,000 vehicles. But what's the stock doing? So I bring this because even before we got started, I saw a couple of people typing in the room, hey, let's look at NEO. Let's look at NEO. Well, we're looking at NEO. Now what? Again, I like the space, but I'm not feeling these stocks just quite yet. And there it is. There's Lucid. Lucid took a long time after it became a SPAC before it even put out its first car. Earnings growth is starting to pick up. Earnings is falling. All of these stocks are in a downtrend. I still like the space.
I mean, Lucid was my
company, and these companies have got to make money.
Lucid was my sleeper pick for my stocking stuffers.
And they got to make money. So when anybody sits out here and they when we do a live stream and we see these names, and I know Patrick sees them just like I do when I do a live stream. This is what you see. The news is there, but the play ain't there just quite yet. Hopefully that makes sense. So that's why I wanted to bring that to the table, because the news looks great. And if you just keep your head on the swivel and just go buy off the news, you may not be doing the right thing right yet. Let the trade come to you. All right. You got anything you want to add to that?
I mean, I like Lucid. It was my sleeper pick for 2022 for my stocking stuffer list we did back in December before the year started. So I like Lucid. I think that's going to be, one of the best performing electric vehicles percentage wise, maybe not dollar wise because Tesla has such a far lead, but.
And the Lucid Air is beautiful.
Yeah, I think I like the Model S better. Well, from a looks perspective, I think the Model S still wins it for me.
I looked at them both. So something, beauty is in the eye of the beholder, right?
Yeah, some people just don't like nice things. That's why the world works the way it does.
Yeah, it's okay. I think Lucid is a beautiful car.
I think it looks like a super fancy Nissan.
I think it's a beautiful car. You're being a hater.
I bet you love the Maxima too, don't you?
The Maxima, the old Maxima, way back in '87.
The one with like the bubble top that has like the chrome on the sides. No, that's what it looks like. That's what.
No, it looks much good or better than that.
Oh, okay.
And coming from the guy that likes the Tesla Cybertruck.
Yeah, I like it for different reasons. I don't think it looks the greatest, but
that is an ugly vehicle.
And it's a truck that can do 0 to 60 in like 2.6 seconds.
I can go 0 to 60 in 2.6 days.
Yeah, exactly.
Yes, but I see that Jeff is right too. Chevy, big companies are getting on board with it. Chevy's talking about making an electric Corvette.
Yeah, and I mean the thing is, I hope Chevy just stops the whole. I hope their issues with their their Hummer, their electric vehicle Hummer, do not translate into their Silverado they have coming out, because if it's the case, Chevy's got a lot of work to do before they're really going to start becoming a major player in the electric vehicle space.
So, and I look at when the big companies, the Fords, the GMs, get on board with electric, name is brand recognition again. The demand is there, folks. Maria says Elon building a plant in St. Petersburg, Florida. Elon is going to put plants everywhere.
Anywhere he gets a discount.
That's how he's going to stay ahead of the game, because he's going to be able to provide the vehicles.
But yeah, I mean, you look at the Hummer electric vehicle, you get 300 miles to the charge. It takes twice as long to charge it because it has twice the batteries that your Tesla does or your Lucid does. You can't even tow anything with it. It's basically everything that was wrong with the Hummer originally is wrong with it as an electric vehicle. It's a really bad design.
Now the Lucid's got the longest range out of all these cars.
For right now, yeah, they had the 500 mile, I think.
Yep, 500 miles.
Yep.
All right, let's go back to the stories, homie.
All right. Gotta find it really. There we go.
Let's go to the next story. It's my story too. Waste Management continues rallying after strong Q1 results. I wrote down something for Waste Management. Waste Management is in the pollution sector, and it's number 14. That sector is number 14. So I like that sector. I don't know what there's a couple other companies in that sector that I like, but Waste Management is in that sector. I like that stock, so we're going to look at that in a second.
That's a boomer pick.
Whatever. It's a good pick. That's a good company. That's a good company. Robinhood. Now I want your insight on this, because I know you got some fire to spit on this. But Robinhood to cut 9%, to cut jobs by 9%, shares down 5%. Couple of things about Robinhood. Robinhood sucks.
Yep. Okay.
That's number one.
Agreed.
But we're not supposed to say that kind of thing. So we got to take that back.
Robinhood, we can though, because we can back it up.
I'm not going to say that it sucks. It's just they screwed a lot of people with the whole meme stock thing, and that was not cool. That was not cool.
That ruined their
I,
business. That will be the reason they go bankrupt.
and so that's number one. Number two, they said, "Oh no, we're not going to do crypto because it's this that." And when they started to look irrelevant in the world of investing or brokers, what did they do? Oh, we're gonna go get crypto. Hey, everybody, you can have crypto. Why? Because you gotta give the people what they want. All right. And then to turn around and say they're cutting jobs by 9%. Why? It's because they need to cut down on the bottom line. They need to make money. So that's my take on that whole Robinhood story. Give me what you think. I know what you think deep down inside, but what do you think?
I mean, I think I agree with you. The whole debacle from last year really just took all the wind out of their sails. It brought to light some of their main money makers of, payment for order flow, that kind of thing. And with everybody seeing how that actually works, why their trades are free, I mean, people are moving left, right, and center to get out of those. eToro, all those, free trading with us, only deposit a little bit of money and get started with it. I mean, they're desperately trying to cling to anything they can. And I was thinking originally when they first came out with their IPO, we talked about it during that stream that, hey, they could potentially revert or change their business model around a little bit and become their own market maker, become their own citadel essentially. And I think they're losing money too fast and they're not making anything enough or making enough to be able to make that transition in time before they go belly up. My prediction is
I'm scared to go down that path. I don't know what to say that when they're going to go out of business. I don't know. I think that's another brand recognition, Robinhood, to new investors, that kind of deal. So I know where you're getting ready to go. I just don't know if I want to go there. You can.
They'll probably go either belly up or go private again. Very, very, or I'm guessing 18 to 24 months is my prediction.
Okay, I got you. Another story. Now, this is a space that I like too, the aerospace and defense, and I think especially with a war going on. But Boeing posted a $1.2 billion loss in quarter one, worse than expected. Again, they're playing again. A lot of it has to deal with Boeing offered some optimism for improvement, however, saying that it submitted plans to resume deliveries of the 787, that's their big plane, airliner, and it increased production of deliveries of the 737 MAX. Not too long ago, one of their 737s went down. Again, 737, not a 787, but a 737. This was another dreadful quarter for Boeing. A longtime aerospace analyst who covers Boeing said in the notes, clients, and we think will really worry investors is that we keep getting more bad news. So I think that the aerospace and defense spot is still heavy. You got your Lockheed Martins. You've got a lot of different other companies, Raytheon, and that are making. You know what else came out too? That I think it was Lockheed. Says they're running out of Stinger missiles. That's a scary thing.
I mean, but that's the thing is if you're going to take this as from the aerospace defense, industry, and you're going to be looking at stocks from there, I think there's definitely some better options because Boeing, yes, they are aerospace and defense, but they also do a lot of commercial with their airliners, that kind of thing.
But they all do. And, I think they all are in both arenas, or Boeing heavier in that arena with the commercial space.
What does Lockheed Martin do commercially? They do government contracts.
They do stuff.
They
do stuff.
Raytheon, what do they do commercially?
They do stuff. Don't make me come across and open my door and open your door and close your door and beat you. They do stuff. But you're right. I'm probably misspoke. They are primarily government contractors.
If you're gonna do the aerospace and defense, definitely looking at better options like Lockheed Martin.
I understand, but it is in the aerospace and defense space. That's why I'm bringing that up. But the majority of their woes are coming from the commercial side, especially with their planes. Absolutely. I can't disagree with you, and I'm not going to come over and beat you, because I was going to come over and beat you. Fernando says
A
he
few
wants
years
me to go
later.
hit you. Fernando said for me to go hit you. But I'm not going to do that.
Yeah, it
Did
would
you
take him
ever
too long to
hear
get over here. He's kind of
Hudson?
slow and kind of old, and
Oh, but I'm a Marine. Don't get it twisted. Don't get it twisted. Anyway, Harry brought up some good stuff. Look at that. Did you ever hear of Hudson Studebaker? DeLorean? Yeah, I know. I hear you. I hear you, Harry. Fernando says no violence, and Robert says go lock your door.
Hey, maybe one day we
Something
could get a
we can't
boxing
lock
stream
our
going
doors.
on,
That
Glenn.
sucks. We can't. They won't let us lock our doors.
Hey, maybe we can get a boxing stream one day. Joey can video it, and we can do a charity stream and do a boxing match.
You don't want to do that. I may look fat.
I'll do circles around you, son.
You do realize I have been trained, right? You do know that. Okay. All right. As long as I'm just putting that disclaimer out there before you get your behind beat.
Okay.
I don't want you to come sue me. You know we're in a sue me
we'll sign the waivers.
society. All right. Last story I got up in here, and someone's talking about crypto. I did a story on how the whole Twitter thing could bring more, garner more attention to crypto, because Dogecoin, which is Elon Musk's favorite cryptocurrency, could be the cryptocurrency. Just think about that. Could be the cryptocurrency of Twitter at some point in time, which could be good for that. And Shiba Inu stays in the spotlight thanks to Elon Musk's Twitter purchase as well. I think that with Elon Musk's innovation, that he could bring more of the blockchain, of the miners. Well, I'm not even going to put the miners in it, but the blockchain and the cryptocurrency to the Twitter platform. The miners are going to be there to mine all of the stuff anyway, all right, plain and simple. But this could bring more light to the crypto, which is getting killed. Crypto has been getting smoked as a whole. This could be, I don't want to call it a saving grace, but this could be a catalyst to push crypto higher. So has the market bottomed, says Bay on Facebook? We have indicators, and we'll talk about that in a second. We do have indicators that show that the market right now is looking for a bottom. We've got a little bit of a rebound today, I think. We'll take a look at that. If you want to put us back into the software.
All right.
Put us back in the software. And what we'll do is we're going to move over. I'm going to come back to my stories. Actually, let me finish up my stories. I'm going to bring up Boeing. Oh, I don't have access anymore. Did you take?
There you go. You got it.
I'm going to bring up waste management.
So while you're doing that, though, you talked about the SHIB.
I know
crypto.
I know.
Did you hear about what happened with what they found out with Hood and SHIB?
No.
They were front running all of that. And they were the main. They were trying to push it because they had all of the SHIB coin, and they were basically trying to. That's basically pump and dump it.
Really?
Yep.
Sigh.
Yeah. So there links it back to your Hood.
It is Hood, and where was the other one? Boeing. Let's take a look at those real quick. So news-driven stories, right? Waste Management, I think, is a great company. Waste Management, bottom left, top right. Earnings falling off a little bit, earnings growth, but the company is solid. Relative value, could like it a little higher than what it is, but it's still above 1. Relative safety, company is solid as far as earnings, and it's going up in price right now. I do like Waste Management. I like that the earnings came out. The stock's price is moving higher on good above average volume. Not as high as it was the day before after it gapped up, but I do like the move on Waste Management. Now let's look at Hood. I think that Hood is just Patrick gave you a prediction, and we covered the IPO on this, right, Patrick? We did it live.
You bought it.
I did.
Yeah,
Yeah,
you made
because
great money when they released their
I'm an
options.
idiot. I bought it. I made some money on it though. I got out of it before it really pulled back. I made some money on it. But just look at it. And as an investor in the stock, why would you not go into crypto? You need to do whatever you can to get yourself out of this channel. All right? And the laying off of 9% of the staff, why? Because they got to increase the bottom line. They got to make some money. All right. And then the last one was Boeing. Man, every time Boeing looks like it wants to run, look at that. Every time it looks, something else comes out and the stock
Yep,
just goes down. The company makes money. Well,
because
they've been
government
around a long.
contracts. If they cut
They
off their public part of their company, that would be a great great company to buy into.
Okay, I got you. You talking about they cut off the commercial side
Yeah, they cut off the commercial side and just focused
on the
specifically on
aerospace and defense?
aerospace and defense. This stock would be back up to its highs again.
Interesting. Do you think they ever will? I think they make a lot of money on that side.
I think, I mean, if they ever get their what is it, the 787 fixed, but I mean, what is it? The 757 was basically the industry standard for how
The
long now?
747 was the industry
Or
standard.
yeah, 747. I think them trying to redo the whole idea of what they're doing is just giving them more issues than they need.
Do you think they need to pivot?
I think they should put more emphasis more so on their aerospace and defense rather than the commercial side.
I got you. All right. So we're going to go look at Patrick stocks because Patrick is going a whole different direction. He's looking at tech stocks. He did a great video on that on Monday on the tech stocks. So talk about them, Patrick.
Yeah, so if I'm not gonna give I'm not gonna give too many spoilers. If you want to go check out the video, it's over on our YouTube channel. Did it on Monday, talking about basically an earnings preview of the FANG or big tech stocks, the FANG stocks that had earnings this week. And as you guys saw with Tesla a little bit ago when I showed it, one of the things I've been noticing is, yes, their company's earnings are still looking good. Yes, they're continuing to rise, but their growth rate, their earnings growth rate is slowing down. And that's giving some cautionary signs that, while these companies are still great companies, they're making money, the growth aspect, and these companies are growth stocks, is slowing down. And so therefore, do you want to be owning growth stocks when the growth is not there? And that kind of is the question that, the $1 million question right now. I think right now what we're seeing with a lot of these tech stocks, though, is they're doing the stock buybacks, share splits, all of that. And I think that, they're basically using it as an attempt to try to keep their stock prices higher and keep their stock prices continuing to climb by using some artificial tools that they have at their disposal, to attract investors and, make their bottom line look good.
You know what else is going to pick up too? Mergers and acquisitions, because a lot of companies that are just barely hanging on, in order for companies to bolster their bottom line, they're going to start buying up a lot of these smaller companies that are just barely hanging on. Right? And now Twitter wasn't one of those companies. Twitter was not great, but Elon Musk said, "F y'all." Can I say that?
Yeah.
I can say that.
You can say that without getting the not safe for work slapped on us.
All right, so he just said, "No, I can do better for this company, but I'm telling you, watch for the buybacks, watch for the splits, watch for the
M&A.
The M&A going into the rest part of the year, because earnings are going to be affected by rising interest rates. There's no ifs, ands, or buts about that. It's going to happen." And these are some of the tools that these companies are going to look at. So
speaking of that, though, do you not think rising interest rates will slow or will hurt the M&A aspect of it, because they're going to need to borrow that money to buy these companies?
Yes and no. I think that yes, short term, but no long term. And I think that the boards will sell it as a longer term play and ride out what's going on short term. That's my opinion. That's just my opinion.
Okay.
But it makes sense that, yes, with higher interest rates, you're going to spend a little bit more money. But I think that they figure right now the bottom lines are going to be affected because of rising interest rates. Just screw it. Let's just go get this company, and for the long term, we're gonna look financially stronger going forward.
Yeah. So I mean, I think right now, I think that's their last play. I think they're trying to do whatever they can to affect their stock price now without having to get into that aspect. But if it comes down to it, I could definitely see it. I think right now, if you do a buyback, that doesn't really involve the interest rates. If you do a split, that doesn't involve interest rates. So they're trying
But the
to use
M&A will.
Yeah, the M&A will. So I think that may be their final option. But yeah, basically Google came out yesterday or last night, had earnings. They still company made a lot of money. I think it was $24 a share roughly.
That's a lot. But I know it's an expensive stock, but $24 a share ain't nothing to sneeze at.
Yeah. But the big news is that they're doing the buyback. They already announced the stock split last quarter, I believe it was. So we're going to start seeing that slowly affecting their stock prices here. And one of the key takeaways I saw from their earnings report was that, they are noticing a slowdown in their ad revenue, a slowdown in their growth. And from a growth stock perspective, that's definitely something you don't want to hear. Microsoft, on the other hand, really good earnings, beat expectations. Now you're seeing it being slightly rewarded, up just shy of 6% so far today. It's been back and forth. The markets have really been choppy here today. But then on deck tonight, we have Facebook coming out with their earnings. It's going to be interesting to see Facebook. They've already dropped. I think that could be another Netflix situation. They've already dropped once. The company is spending money left, right, and center on their metaverse. So that's going to hurt their bottom line. The Apple changes, the privacy changes are going to continue to affect their bottom line. And so they've also already prepared people saying that they expect user activity has been slowing down. So they're already warning about that. It's undervalued right now, but still, I don't think we've quite seen the bottom with some of these big tech plays so far.
What's interesting? We talk about Facebook. We talk about Twitter. You know how much bigger Facebook is than Twitter? I don't think anybody talks about that.
Because they bought out so many competitors.
They're huge. And Twitter is like, listen, it'd be very interesting to see Twitter effectively go after Facebook from a platform standpoint. Be very interesting to see if is Elon Musk that innovative to do that to the company. Be very interesting.
I don't know. I don't think it can. I think they're two very different platforms used for two very different things. I see Facebook as more of that personal side where you share, pictures to show friends, that kind of thing.
Mm-hmm.
Twitter is, just throwing out whatever's in your head, throwing it out online.
You don't think they do that on Facebook? Facebook throws out whatever's in their head too.
I don't see many people just, posting comments or tweets, or not tweets, but, posting just random thoughts or random quotes, that kind of thing. I don't really see that on Facebook. I see more friends, family, that kind of situation, showing, pictures from vacation, that kind of thing. Or, family moments or that sort of mentality on Facebook. So I think they can coexist. I think they've done a great job already coexisting. But with Facebook switching more towards the metaverse going forward, I think that long term, it will be a great play. Maybe their metaverse isn't going to be as good as some other potential candidates coming up, but I think it's at least a move in the right direction.
All right. And I know that's a big move for them.
Yeah.
And, they're putting a lot of efforts behind it. I hope it ain't in vain, because then that would suck for Zuckerberg. It would so suck for him.
I think the metaverse play is either going to make or break, but I saw recently their NFT minting, to mint an NFT, they take 50% royalties on all NFTs on their platform for their metaverse. So if that's going to be the case, that could, it's going to be a make or break for them. If that's going to be the case, if they're going to try to nickel and dime people and harvest their data just like they're doing now, I think you're going to see a lot of issues going forward for it, especially with other competition and more decentralized competition. So
Robert
it's depends on how they come out with it.
Robert on YouTube is saying, Glenn Patrick, with upcoming stock split for Google in July, retail buyers should drive up pricing after this 20-to-1 split. Your feedback. I'm thinking that Google, in and of itself, should do fine after the split, prior to the split, and even after the split. I think it's got good earnings growth rate, as you can see there. Fundamentally, it's a sound stock. The whole idea of the split is because the stock is trading at $2,200. So I think a lot of people who feel the same way that I do about it will get on board, but at a much lower price. So I think the stock's price will it'll bring in a lot of people, and that's what its goal is. It's going to bring a lot of people to the table to buy the stock, and I think fundamentally it's sound. Patrick?
Yeah. I mean, I think the split is definitely a positive form, especially, Amazon also doing a split, Tesla doing a split. I think it's definitely going to be a positive, make their prices more attractive. But I do think, timing with the market is also going to be a huge aspect to keep in mind.
Absolutely.
They can do a split, it makes it cheaper, but if the markets are crashing left, right, and center, people are going to wait. So I know historically splits usually do help stock prices because of that. It makes it cheaper, more retail can jump on board, all of that. But at the same time, timing is everything. And if the timing's not right, I don't think we're going to see that impact, at least for the short term when they actually have that split.
All right. Glenn, couldn't find you on Twitter. Go look for @Glenn Tompkins Jr. @Glenn Tompkins Jr. Patrick, what's your Twitter?
P France, I think, or PR France, PR France 88.
It's got an 88 in there somewhere.
Yeah, I made my Twitter handle a long time ago and never really used it, and then I started using it, and I'm stuck with it now. I could have made a new one probably, but yeah, PR France 88. There we go.
All right. Let's go to your next couple, and then I want to look at the market timing graph before we go.
So yeah, the last two, because we have earnings coming up Thursday. These are the two bigger ones because Facebook I'm already pretty much discounting or writing off right now. I could be wrong, but I don't trust it as much as the other two, and those are going to be the ones I really wanted to talk about. Apple,
wait.
Because I know you love Apple.
Before you go on, and we have to make a video about, Facebook crash. Was it a surprise? We are talking about it, and I think Patrick's putting a good spin on it. It's a sell recommendation. When he brings up the graph, let's go take a look at how long it's been a sell recommendation, because I don't want to hear your mouths, because it's gonna come up. All y'all gonna be like, well, yeah, after the fact, blah blah blah. We're gonna look at it. Put it on however long you want to put it on. Look how long it's been a sell. Put it on a 6-month graph.
I'm gonna put it on a 1-year graph.
Look how long it's been a sell. So I don't want you guys, when earnings come up and it gets poopy, it looks a lot like Netflix, doesn't it, Patrick?
Yep. That's why I'm saying I think it'll be the next Netflix. But here's my other reason for why I think we'll see it continue to go down like Netflix. Not only does it look like it, but look at earnings per share. Earnings, yes, they've been rising over the course of the last year, but over the last 6 months, it's a different story. They're actually lower on a 6-month basis. You look at the GRT, look how fast the growth rate, their forecast earnings growth rate is dropping. Everybody is discounting it because they're putting so much money into their metaverse. It's hurting their bottom line. So therefore, people who look at the fundamental aspects just look at the face value. They don't take into account they're putting it back into the company.
Right.
And
now,
that's affecting their growth rate.
That could be a good thing for them long term.
Long term.
But right now,
short and medium term, I don't think it's going to be that great for them.
Right.
And that's been what I've said since day one. I think the metaverse could be potentially a game changer for them. And so it's a good one to keep on your radar. But short term for right now, I don't think it's going to be that great of an opportunity. They've got a lot of things to try to fix on their platform with the whole Apple privacy policy, their ad revenue. before that aspect is going to really start thriving. Their user growth is slowing down significantly. And until we see an actual pivot, I think we're going to be having some issues.
So when Patrick does this video, if he decides to do a video, I don't want nobody to come back be talking about, yeah, after the fact, blah, blah, blah.
I mean, I did the video on Monday. They can go back and check the video on Monday.
Oh, there you go.
Yeah. See? Video's already been done.
Okay.
But yeah, with that earnings growth rate dropping, I'm a little hesitant for what we're seeing with it coming up with earnings today. Damn. All right. So getting out of here, the 2 earnings plays though that I want to talk about come out on Thursday. Glenn, I know you're gonna have fun talking about these as well.
Woo, Apple, baby.
Apple and Amazon. So both of these have great, safety or great long-term potential. They have great safety numbers. They're consistent on their fundamentals, their balance sheets, all that. But both of them have been in a downtrend. Now, if I highlight them, let's go take a look at the graph real quick, and then we can talk about them from the graph perspective. So from a graph perspective, we'll go 1 year once again. And same situation. Earnings have been steadily rising for Apple. Growth rate has been slowing down though.
And everybody knows that I love Apple, but I'm not in love with Apple. You got to know when to hold them and when to fold them.
So what's your thoughts on earnings coming up?
I think, again, the company's fundamentally sound. But the company is falling, as you can see. It's below a 20-day. It's got a level of support sitting right here. Could it fall to that level of support? Absolutely. Do they meet earnings? Excuse me. I think they beat earnings. I think because of relative safety, they beat earnings. What I don't know about is the forward guidance.
Yep.
That's the problem. So based upon what forward guidance is, will determine whether the stock's price goes up or goes down. I think they beat her. This company makes money hand over fist. I just went and bought a freaking 12.9-inch iPad Pro. This is a freaking computer in my hand as a tablet. 256 gigs of memory. I am an Apple geek. I love Apple, but I'm not in love. And this is just why. From the analysis perspective, I think it beats earnings, but I don't know what forward guidance is. So that's my take on that.
Yeah, and I mean, you look at a lot of the growth that we've seen with Apple over the last few years, because, iPhone sales have been slowing down, their computer sales have been slowing down. They're still good, but slowing down from what they have been. A lot of their growth has been foreign markets, and I think, with the rolling lockdowns and all the issues still remaining around the world, I think that's going to be their talking points, and that's gonna hurt the stock on the forward guidance aspect.
Okay. So I'm with you. I still think that they beat earnings. I just don't know what forward guidance. And Patrick gives a good point on what forward guidance should say with the lockdowns in China. So it may not be a beautiful thing.
And so our last one, Amazon. Amazon, I mean, you look at the historics of Amazon, they always have this weird pattern where their earnings per share drops, starts rising again, then drops, has these big drops randomly. But the main thing that I've noticed is their earnings growth rate, their forecast earnings growth rate. Look how fast that has dropped. It's gone from 35 at its high about midsummer, end of summer last year to a reading of 24 right now.
That's a big drop.
That's almost a 30% decrease. That's roughly a 30% decrease. That's pretty significant.
I agree. I totally agree.
And I mean, just like with all the other stocks right now, you're hitting lower highs, lower lows. The growth is slowing down on these growth stocks. What is there that Amazon's going to be doing, to try to show that they're still growing like they have been? The people are coming out of lockdowns. People are going back out to the stores to buy stuff. I don't think people are shopping online nearly as much as what they were a year ago. And that's going to hurt Amazon's bottom line.
I think that people have gotten, ask my wife. I think my wife personally keeps freaking Amazon in business. I really, really do. Every day I come home, there's a box of something. every single day. So from that perspective, Patrick, I think that once people have gotten a taste of getting their stuff delivered, they're like they're liking it. Look at Cyber Thursdays. Cyber Thursdays just keep getting better and better every year.
But I
So
know with Amazon, they have the Whole Foods. And my
they have
wife was
what?
using that for the longest time because with Amazon Prime, as long as you ordered over a certain dollar amount, then you got free delivery. Now, no matter what the dollar amount is, they're now charging $10 for
Yeah.
delivery charge every single time. They're trying to increase the cost of their Prime memberships. I mean, it would appear from an outsider's perspective, they are trying to squeeze every single penny they can out of it to try to help continue to boost their price, so that way he can go ride up in a very odd shaped rocket back into space.
So, dude, if you're a business, it's capitalism, baby. If
But
you're
look
a
at
business, what are
Netflix.
you trying to
Netflix
do?
tries to penny pinch every single dime out of people, and look what they're doing right now.
Yep.
Is Amazon gonna setting up to be similar to what we're seeing with Netflix? At least from the Amazon, the standard Amazon e-commerce store, that side of things. I mean, granted, Amazon owns pretty much at least one company in every single industry in the U.S. market.
That's what keeps them rocking and rolling, baby.
Yeah. But from their standard company business model, I don't know, man. I think we're starting to see some cracks coming out of some of the big giants here.
I hear you.
So,
and 28 Chodson, you talking about LNG? I did a video on that within the last couple of weeks. Go check it out. Folks, if you don't support us outside of the live streams, you should. A lot of topics that you're bringing up in here between Patrick and myself, we cover a lot of those topics on our videos on the channel. If you're not already a subscriber to the channel, hit the subscribe button right now, number one. Number two, if you like what you saw today, hit the like button. If it was worth your time to sit here and listen to us bicker, which was great.
If you want to find out all the great things about GameStop, follow me on Twitter.
Yeah, follow him on Twitter for that. Go ahead. You just go ahead. All right. One last thing I hate you, Patrick. One last thing I want to look at is our market timing graph. Someone asked if the market bottomed. I'm going to do this for the purposes of helping you, especially if you're not a subscriber to the software. We've got two indicators on the software called the MTI, and I'm not going to explain them here. The people who are subscribers to the VectorVest software will know what they are. All right?
If you want to find out more about them, you can click on the link down in the description and sign up for the trial.
For 99 cents for 30 days. Absolutely. But we have an indicator called the MTI. We have an indicator called the buy to sell ratio. There it is. The MTI and the buy to sell ratio. These are at a level where the market is starting to look for a bottom. All right. Interesting today, we got to a low of 57.79 on it, and we bounced back up off of it. The only way you know when the market is bottom, then it's market is bottom is when it stops going down and it starts going back up. All right, so we have an indicator that tells us that the market currently is looking for a bottom. Could it still go lower than it is right now? It absolutely can.
Mm-hmm.
But we in the VectorVest world know that the stock market is looking for a bottom. I'm going to show one other thing. Who here wants to look at the Bahamas portfolio? Type of me in the room. All right. How many of you want to look at the Bahamas portfolio? So Patrick, I'll talk to you about that in a second. So
we're going to the Bahamas?
Yeah, it's a portfolio for getting ready to go on a vacation for the Bahamas by the summer.
Dude, we need to do a live stream from the Bahamas.
Oh, that would be cool if we could. Here's my Bahamas trip. This is using the primary wave. All right, this was strongly just look at the primary wave sitting in cash right now. And this is looking at a search called Search Cheap Rising Business Sectors. That's a stock. That's a search we have in the software. All right. And my second one is buying long and selling short. This is using Steve Chappell's system as a system. Look at that. We're up. Woo-wee. We're up. We're up about 2%, even though it's down today. But the move, because we are shorting this portfolio, hey, the Bahamas trip, we made some money on it. All right, we made some money. It was a $10,000 portfolio. We're up now about $200. We got $200 to go towards our Bahamas trip. All right. Sonny says, live stream? Never mind. Let's all meet on the beach. I'm with that. All right. So I try to show these in my live streams. And look at that. We're up 2% now. And somebody said last week, said, man, I done unpacked my bags. What did I tell you? I told you to sit still. Let the system, and this is a trading system. This one knows when to buy, what to buy, and when to sell. It's using a market timing signal with Chappell's Champs, and on the short side, selling stocks from a search as well. And look at that, folks. So I always want to try to bring that up during the live streams when I can. All right, Patrick, you could put us all together, just me and you on the screen, so we can log.
So I got
Unless
one more
got
thing
something
real
more
quick.
you want to talk about before we go.
I got one more thing.
Okay.
For anybody who's out there that follows the Jim Cramer thing, or the inverse of Jim Cramer, yesterday he went bearish on the FANG stocks. So that means most likely we're going to be seeing FNGU start to rally here. So if you're somebody who likes to trade the inverse of Cramer, check out FNGU. Just throwing that out there as well.
Listen, I'm watching him on Twitter, man. I watch him whine, but he's beat up a lot of people along the way. There's no ifs, ands, or buts. He brought it on himself when he attacked retail investors. He did it.
And we talked about it last week and all that too. So
it is what it is. All right. Again, if you haven't hit the like button, hit it. If you haven't subscribed to the channel, subscribe. Patrick's got a live stream on tomorrow at 11 o'clock on our YouTube channel. I've got a live stream tomorrow at 2 p.m. on our YouTube channel. We've got a lot of videos out on our YouTube channel, folks.
And on Facebook as well.
And on Facebook. So you need to follow us on Twitter. Follow VectorVest on YouTube and on Facebook. And man, there's a whole bunch of stuff out there. Just follow us.
Follow us on all of our socials. That's all you need to say.
Follow us. We're
all socials.
All over the place, folks. Anywhere there's social media, just follow us. Good gravy. All right. And,
you wanna say the outro this time?
I do. Thank you, folks, for being here. Thank you guys for supporting the channel. Adios, arrivederci, ciao, au revoir, sayonara, aloha to all my peeps in Hawaii. Bom dia, salam, shalom, namaste, yasu. Until next time, folks, see ya.